you're looking to contribute a large sum of money into super, you might have come across the bring forward contribution rule. For some people, this rule can get quite tricky and it's easy to make costly mistakes. In this video, I'll simplify non-concessional contributions and the bring forward rule with plenty of examples and visual aids. This way, you will gain a deeper understanding that goes beyond the basics, helping you use this knowledge effectively for your own planning. In order to understand the bring forward contribution rule, you need to understand non-concessional contributions in its most vanilla form. Non-concessional contributions are contributions made to super with after-tax money. What I mean by after-tax money is money you have already paid income tax on, like your wages from your employer that are now sitting in your personal bank account. You don't get taxed again on non-concessional contributions inside super, and you cannot claim a personal tax deduction for them. We know that money contributed to super is locked away until at least age 60. So why would someone want to make large non-concessional contributions? This strategy is particularly popular for those nearing retirement age, as they will soon have access to their super. Additionally, money invested inside super is taxed at a concessional rate, which is often lower than most people's marginal tax rate. I explain these reasons in more details in this video. Each year, there is a limit to the non-concessional contributions you can make to your super. This annual limit is known as the General Non-Concessional Contribution Cap. The general non-concessional contribution cap is always 4 times the concessional contribution cap. Therefore, on 1st of July 2024, this cap increased from 110,000 to 120,000. A good way to check your non-concessional contribution history, total super balance, and bring forward arrangement is through MyGov ATO service. Now let's dive deeper and take it to the next level. Did you know the general cap is just that, a general one? Depending on individual circumstances, one's non-concessional cap may be nil, equal to the general non-concessional cap, or a higher or lower amount than the general non-concessional cap due to the bring forward rule. In FY25, one cannot make any non-concessional contribution when they have a total super balance of 1.9 million or more on 30th of June 2024. Additionally, one cannot make any non-concessional contribution beyond 28th day after the end of the month in which they reach age 75. For example, John's 75th birthday falls on 1st of November 2024. He has until 28th of December 2024 to make a non-concessional contribution. After this date, he cannot make any non-concessional contributions. In FY25, for individuals under 75, with a total super balance of less than 1.9 million as of the 30th of June 2024, who have not triggered or do not intend to trigger the bring forward rule, your non-concessional contribution cap is equal to the general cap of 120,000. Please note that the information in this video is for educational purpose only and not financial advice. You can find all this information on the ATO's website. My goal with this video is to simplify a very complicated concept to help you understand it better and make informed decisions. Next up is a bring forward rule. Bring forward contributions are non-concessional contributions that you bring forward from up to 2 future years. For FY25, you can potentially contribute up to 360,000. This is like prepaying or paying in advance your future years of super non-concessional contributions. Please don't confuse them with carry forward contributions, which work in the opposite direction by allowing the payment of unused concessional contribution caps from past years. I have a dedicated video on that topic, and I will include the link in the description box down below. Who is eligible to use the bring forward rule? Well, to trigger the bring forward rule, you need to be under age 75 on the 1st of July of the financial year. The number of years you can bring forward into the first financial year is determined by your total super balance as of 30th of June of the previous financial year. Here's the rules for the bring forward rule first triggered in FY25. If your total super balance on 30th of June 2024 was less than 1.66 million, you can contribute up to a maximum of 360,000 using the bring forward rule. If your total super balance was between 1.66 million and 1.78 million, you can contribute up to 240,000 using the bring forward rule. If it's between 1.78 million and 1.9 million, the maximum non-concessional contribution you can make is 120,000. If it is 1.9 million or more, you cannot make any non-concessional contributions. Now let me show you two examples to help you understand how this works in practice. Joe is 68 years old and his total super balance as of 30th of June 2024 was 800,000. He received an inheritance of 360,000 in FY25 and wished to contribute it to his super. Joe has never used the bring forward rule before. Joe can make a one-off contribution of 360,000 to his super in FY25 and then make no further non-concessional contributions for the next 2 financial years. Alternatively, if Joe does not receive the entire inheritance at once, he could contribute, say, 200,000 in FY25 and 160,000 in FY26 and nothing in FY27. Other combinations are also possible as long as the total does not exceed 360,000 over 3 financial years once the bring forward rule is triggered. The next example is especially important for people who are approaching age 75 because the eligibility criteria for making non-concessional contributions and triggering the bring forward rule is not the same. Remember John, his 75th birthday falls on 1st of November 2024. Let's say John has a total super balance of 800,000 as of 30th of June 2024. He received 360,000 inheritance that he wants to contribute to super as well. Can he use the bring forward rule? Since he is under 75 as of 1st of July 2024, he can trigger the bring forward rule in FY25. As his total super balance on 30th of June 2024 was 800,000, he can contribute up to 360,000. Can he make non-concessional contributions? Yes, but only until 28 days after the end of the month in which he reaches age 75. That cutoff date is 28th of December 2024. So as John is approaching age 75, he does not have the luxury of pacing his contributions. He needs to contribute the entire 360,000 before the deadline if he wants to maximize the use of the bring forward rule. If you find this video useful so far, don't forget to like and subscribe. Coming up next, what if the bring forward rule has been triggered in the past? Say FY24 or FY23. If that is the case, your individual uplifted cap due to the bring forward rule stays the same as what it was when you first triggered the rule. In other words, you don't benefit from the general non-concessional cap increase in FY25. These tables are pretty self-explanatory. You read them the same way I explained for FY25. One important rule to note is that if someone has triggered the bring forward rule and their total super balance just before year 2 or year 3 of their bring forward period is equal to or greater than the upper total super balance threshold for that year, their non-concessional contribution cap for that financial year is reduced to 0. Let me explain with an example. Anne, who is 60 years old, had a total super balance of 1.65 million on 30th of June 2023. In FY24, she made non-concessional contributions of 270,000, triggering the bring forward rule with a 330,000 cap over a 3-year period. By 30th of June 2024, her total super balance had increased to 1.92 million. Normally, Anne would have the remaining 60,000 of her 330,000 bring forward amount available in FY25. However, because her total super balance on 30th of June 2024 is at least 1.9 million, her non-concessional cap for FY25 is reduced to nil. That's a lot to take in, isn't it? If you have any questions, please leave a comment down below and I'll do my best to clarify. Remember, non-concessional contributions and the bring forward rule is just one way to put a large amount of money into your super. Concessional contributions and the carry forward rule can also help, often providing excellent tax benefits. Don't overlook these options. Watch this video to learn more.